Well, if I asked how many people are paying off student loans, I bet most of us would raise our hand. Financial expert Nathan Bachrach explains how to tackle what can be a huge amount of debt and a common mistake. And he explains why this is also the best month to buy a new car. Good morning.
How are you?
I'm wonderful. So you tell me that this is a very common mistake. Those are two things we're going to talk about this morning. We're going to focus on. Okay, so the first one. I'm 27, working full-time, but struggling with student loan payments. I owe $85,000 and have been turned down for income-based repayment because $65,000 of that is private loans. My parents co-signed. I'm worried I'm going to hurt their credit too.
Yeah, and you will hurt their credit because your parents have co-signed. You know there's 165,000 people on Social Security that are having money deducted from their Social Security payment for a student loan. This is one reason why I do not like private loans. Exhaust all federal loans before you even think about a private loan because the terms are much more flexible. All right. The other thing I would say, simply money point, never borrow more money for college than you can expect to make in the first year. So if you got a job that's going to make $85,000 your first year out, great. If you're in sciences or engineering, wonderful. Borrow $85,000. In this case, $65,000 of those loans are private loans. Very hard to consolidate. And this person's absolutely right. They miss a payment, that's going to hurt their parents' credit as well as their own. Deferment, by the way, will show up on your credit report, but it won't mess up your credit score unless, of course, you miss a payment. StudentLoanHero.com is about the best I can suggest if you have private loans trying to consolidate them. But please, whatever you do, don't take a private loan until you have absolutely exhausted all other options.
Okay, great advice. Thank you so much. Now, this next one, talking about buying a home. Boy, a lot of people can make this mistake. I want to buy a new home, but don't have enough money saved for the 20% down payment to avoid PMI unless I take money out of my 401k. What do you recommend?
I got three answers for you. No, no, and no. First off, PMI, private mortgage insurance. It's insurance for the bank to protect them because you haven't put as much down as they would like, which is 20%. In this day and age, that's what a bank is looking for. Look, if you can't afford the house, you can't afford the house. Borrowing money to get another loan is like adding fuel to the fire. All right.
Okay.
So let's get a house we can afford, or forget about it. Because when you take money out of a 401k, at the very least, if you borrow it, you're going to be repaying yourself with, by the way, dollars that you have to pay tax on first before you pay off that loan. So that's kind of silly. And then the money's not in your 401k to compound and grow. And I will tell you something, if you don't put money away now, you're young. Guess what? Let that grow for 20 years. So you put it in a house. By the way, houses are lousy investments. You got taxes, you got insurance, you got to paint them, you got to take care of them. They fall apart. You got to fix them.
I get the idea.
You got it? You got it.
That's why I rent. Okay, let's get to this before we have to go to break. Why is October a good month to buy a new car?
Well, because they're piling up on the lots because all the new cars are coming in. So that's why I would go buy a car now instead of maybe, sorry, February or something like that. Great time, a great time to go look for a car. Other thing, patio furniture, duh, it's sitting around now. If the hardware stores still got patio furniture, they're desperate to get rid of it. And jeans. Now, I don't buy Lucky jeans. I'm lucky I can fit into anything. But Lucky jeans and Levi's right now are going at 40 to 60% off. So because they're left over from school.